Well, as we've been reporting, the U.S. economy added 192,000 jobs in February, and the unemployment rate dropped to 8.9%, the lowest in almost 2 years. Let's take a closer look now at these numbers and what they mean for the economy overall. Joining us right now to do that, John Herrmann, economist and senior fixed income strategist at State Street Global Markets. Based on data compiled by the folks here at Bloomberg, he is one of the most accurate forecasters of the U.S. economy. We call him a Bloomberg best, and we love talking to him. John, good to have you back with us.
Thank you, Carol. Great to be with you.
So you and I were talking in the break, and you were saying we're kind of poo-pooing this report. The markets don't seem to like it. You like it. Why?
Okay, we'll have to just, we're going to give you the numbers, give you a quick breakdown, and then we're going to tell you what we think is a reasonable roadmap so that markets can sort of get their expectations on sides and not get caught off sides. So here's the thing. We averaged over the last 2 months 145,000 gain in private payrolls. It's a pickup from the 125,000 gain we averaged over the second half of this year. The best leading indicators of where we're going with job gains are the weekly initial jobless claims, and in particular, the 4-week moving average. Now, those have ratcheted down to 388,000, and over the next few months, they're going to ratchet down to about 350. When they hit that 350 threshold, that's a critical threshold. When it hits that threshold, usually, historically, with very high probability, the economy generates, on average, 200,000 private jobs per month. But even in the meantime, in this coming month, for the month of March and for the month of April, we're looking for, our models are predicting 180 to 185,000 gain private payrolls. So again, these are really, really good numbers. The market's just incredibly impatient right now in wanting 200 plus. But give us a couple of months, get these jobless claims lower, and I think, and I think that'll be a reasonable expectation.
John, what about the headwinds, though, caused by those rising commodity prices? Ben Bernanke addressed it this week. I mean, isn't that something, though, that could be ultimately problematic for the economy?
Absolutely. We were just discussing that. So right now, gasoline prices are $3.47 a gallon nationwide. That's a pretty steep price. Within a month's time, they could be up to about $3.70 a gallon. And, maybe by Memorial Day or a little bit after that, it could be $3.85, maybe even $3.90 a gallon. This is definitely a major headwind. So we are respectfully observing the needs for the people in the Middle East for self-determination and so on. It's causing a bunch of jitters in the oil market. But we're just hoping that as they resolve issues, and hopefully sooner, not later, that oil prices will begin to normalize and the economy can, go forward without really the headwind.
John, I want to bring up some comments by somebody you know well, David Rosenberg, and he had some reaction to today's jobs report. And he said, so while we're seeing positive job growth, it's not accelerating, even though we are coming off the most intense impact of the fiscal and monetary easing that was unveiled late last year. He brings up a good point. There's been a lot of juice pumped into this economy. Shouldn't we be further along in the process?
Okay, that's what I mean when I said earlier that everyone is really, really impatient. So the thing is, what we'd say to David is, David can get wound up a little bit. So we just want to, keep things in perspective. As we mentioned, the pace of job separations is slowing very rapidly. 388,000 averages for weekly jobless claims. We should, in the next 2 to 3 months, ratchet down to 350, at which point we should begin to see a more consistent rate of 200,000 plus. And even in the meantime, again, for the month of March and the month of April, our models are showing that the economy is actually going to catch up and do a rapid rise and a rapid catch up. So everyone understands the frustration. We've spent almost $2 trillion in trying to support the economy, but we had an enormous, financial credit bubble burst. It was just enormous. We're talking about several trillions of dollars of bad mortgages were made. So we're trying to dig our way out of it. We're making pretty good progress at this point. We have a few headwinds still in front of us, but if we just stick to the formula and keep pursuing and keep innovating, you have to look at the companies that continue to innovate, and they're just phenomenally successful companies, and we think that that's the real key.
So, John, even when you look at different aspects of this report, and I think about average hourly earnings, they were flat. They were expected to be up about 0.2%. I mean, that's a disappointment as well. I mean, we talk about how important consumers and consumer spendings are to our economy. Is that a disappointment, though, to you?
Is that trouble? And the answer would be, No, and the reason why is they upwardly revised the previous month and sort of stole part of the gain from this month, first point. Second point is when we look at something called average weekly payrolls, which captures not just the wages, but how many hours people are working, the number of bodies at work, that gained 0.55 this past month. It's up 4.5% year on year. These are decent gains. When we see the personal income number at the end of the month, personal income is actually going to be pretty decent.
John, let me ask you, how confident are you that let's expect, or let's assume maybe that the Fed totally steps off the gas pedal come June? I mean, is the economy strong enough to maintain the momentum that we've gotten up to this point and maintain the job creation or even see that improve? You seem to expect that it will.
Yeah, I think we're running at a really good clip. And again, we do have some headwinds. We're not ignoring them. The energy prices are definitely problematic.
Right.
Hopefully they just turn out to be just a short-term thing. We do have some further cuts, state and local governments, but we factored that in. So basically, we think we're in a pretty good window of growth, and we just need to have things unfold.
Still the optimist. All right, gotta love it. Hey, John.
I'm sorry.
No, don't be sorry.
I'll see you later, Carol.
All right, John, have a good weekend. John Herrmann from State Street Global Markets.